Well, here now to discuss the implications of that OECD report and indeed the outlook for Spain, I'm joined from Barclays Capital offices in the city by the investment bank's chief Southern European economist, Antonio Garcia Pascual. Thank you very much for joining us. Just looking at the headlines from this OECD report, do you think that it does look as if Spain is going to need more a bailout or certainly more help next year?
I mean, clearly what is needed for next year is to basically continue with the reform agenda. Two important elements that are mentioned in the report is the pension reform. This is not yet an important issue in the near term, but it will become a substantive issue given the very negative population dynamics for Spanish pensions. So this is critical. The government has committed to the reform by January 2011, so we'll have to see whether they're actually passed with substantive measures. And the second one, in terms of structural reforms, is a second round of labour market. At the core of the productivity issues is really labour market problems. So the second round of reforms is, in our view, as well critical.
Now, Nouriel Roubini, speaking recently, said that that Spain was too big to fail, but also too big to bail out. Do you agree with that?
Well, I think there's no question that the size of Spain's economy is really large, right? From the periphery, if you put together Ireland, Portugal and Greece, this is still 60% of Spain's GDP. So it's the systemically important one in the periphery. However, the situation in Spain relative to these other three economies is somewhat different. I mean, we think that the public finances are sustainable. We think that the economy is solvent. We think that the large banks are solvent. But we think there is an important problem in the commercial real estate and in particular some of the savings banks, and that needs to be addressed.
And in terms of Spain's ability to address those crucial areas in time, how do you rate that?
I mean, here they really need to come up with a whole, holistic agenda. A piecemeal approach is not enough anymore. They really will have to come up with a full important package for the pension, for the labour market, and a speed up of the recapitalizations of some of the savings bank sector. And again, it's important to keep in mind that in the real estate sector, which is where the bubble burst, is not the residential but the commercial, and that is what is bringing some savings banks under, and that needs to be taken care of quickly.
You say quickly, and of course there is a time issue because the bond sale at the end of this year, didn't go as well as expected. There's an awful lot of money to be raised next year, so they could be under increasing pressure from the markets here. Yeah,
indeed. I mean, you already see that in the spreads. As we mentioned, it's not an issue of solvency, right? Spain could sustain increasing funding yields for the next year. But what if the market stops being there? I mean, that's an extreme event. We don't expect it, but to avoid that event, obviously the government has to demonstrate on the banking sector, appropriate recapitalization of some of the cajas, and on the structural reform agenda and pensions, especially pensions and labour market reform, more determination.
And just to broaden it out a little bit, we were also obviously seeing problems in Portugal, a smaller economy, but Italy, and now we're hearing that France's AAA rating is also under threat. The contagion has not been contained, has it?
I mean, that is the key issue. That is the key issue. I mean, that is why Spain plays such a pivotal role, because obviously there is some concerns for Italy as well as for France, as well as other countries. If you think about the exposure of France as well as Germany to Spain, it's extremely substantial. So there's no question that if Spain fails to deliver those reforms, there will be consequences for France. There's no question about that.
Okay, thank you very much.